How does the resource space compare to others? I'm with Chen Lin with Chen's Stock Picks, who covers both mining, biotechnology, and energy. Chen, welcome back to Kitco.
Thank you. Glad to be here.
Frame the mining sector for us right now. We had a tough 2023. How are we looking forward in 2024?
It was a very tough 2023. I expect 2024 to do better. Okay, from producer, the mining major cost is energy cost. Oil price came down, energy price come down. The next also it's labor and material. Okay, depends on open pit underground, but it's energy, labor, material. They are the three major costs. Material is coming down as well. Labor, depending on places, could be coming down. So as even as the metal price, if stay the same, which gold actually it's a little bit higher right now than last year, the margin will increase because of the other price the cost start going down. So we went through that presentation. Many experts were talking about last year was such a difficult year for mining company. Even though gold was hitting high, but their margins decreased because of all the costs are going up. But this year, so far, it's on the reverse. So we should have a decent year for producer. They should have a better free cash flow, better margin. And for the juniors, that's a different story. Last year was really a disaster, except for a few stars. So I think it will continue to be stock pickers market. Even in the bear market, a great discovery will be appreciated. So I think that's why I'm here. So we have a lot of companies here, and they're very well attended. A lot of investors are looking for good ideas.
We're at the Metals Investor Forum, of course, as well, too. And we've had a snowy Vancouver, and the attendance has been welcome. We've seen a lot of people here, and it'll be interesting to see what happens at BRIC. But you did mention energy costs, and that has been a surprise right now. Why do you expect that oil prices will be able to stay lower, and then energy prices should come down for some of the producers?
Well, there's no guarantee, but it looks like energy price will be range bound, and if it's not drift lower. But the reason is the United States is producing so much oil. Last year, the United States was surprised all the experts actually produced even more oil with less drilling, because you look at the rig count actually is going down because they invest energy. I don't know. People thought that with this lower rig, they should produce less energy, but it actually goes much higher because it's more efficient. Technology, fracking technology getting more mature. So even with the less drilling, they get more oil out. So that has been the pressure. So right now, there's so much spare capacity, believe it or not, outside and in OPEC. So they keep cutting. They try to keep up, keep the price. But it's very difficult for them to, because OPEC, they have rift between them. Why don't you cut? I don't cut. So they're having problem. So I expect that will put pressure on oil for this year. But on the other side, our strategic petroleum reserve in the United States was very empty. So Biden sold a lot of oil when it was high to cool down inflation. Now he need to buy back before the election. It become an election issue. So they will buy oil. Well, so I say it's probably range bound, if not lower, but much lower than last year.
Speaking about another pressure on commodity prices, and that was kind of the bleak outlook for China and its macroeconomics, and that kind of muddled up everybody's copper narratives because that metal was expected to do better than it did in 2023. What do you see in terms of China right now? Because it's just such a vitally important market for commodities, and also look at the carnage that happened to lithium, for example.
Yeah, absolutely. That's a very good point. I don't share that bleak outlook to China. Actually, I will present later today. I think China has a different side of it. Right? The housing market is gone. I'm going to put a picture there. You can see it will be finished in the next 5-10 years. Okay, it's going down. But the other area is doing extremely well. China's export doing extremely well. China's automobile overtaken Japan to be number one in the world last year. Okay, it took Japan like 20 years to be number one in the world. China just took it in a few years. Why? Because they're exporting cheap electrical cars, like $10,000, $15,000 new car around the world, right? People in Mexico, people in Africa, not have a chance to get a new car. They may buy a used car from United States, which we don't want, and then they got it, or stolen. So, but now they can get a new car. So actually, that's the main driver for a lot of commodities. So I don't share that bleak outlook of China.
One of the surprising trends that we've noticed just at the start of 2024 has been just the deals that have been happening in the base metal space. So we see the announcement that FPX Nickel had in terms of what's happening with Sumitomo. We saw Canada Nickel, that's just done like a spate of deals in the last 30 days, whether that was with Agnico. And also Solaris had its deal as well too. It's just surprising because again, like the softness in the base metal prices, we still don't have an outlook, but it seems like it's kind of like a good news story for what's happening in the mining space.
Right. I think the mining CEO, they're smart. Okay, they have a vision. The best time to buy asset is not like when they were sky high. The best time is when there's softness of the commodity. Right. We have very weak zinc price and nickel coming in, copper doing pretty relatively well. So actually, for those mining company with their strong balance sheet from last bull cycle, they're ready to buy. I see more to come.
Going forward, compare the precious metal thesis versus the critical metal thesis. How would you, taking a long step back for investors, how would you look at the two spaces?
Oh, that's a very good question. I think in critical metal, United States need to do a lot more. There's so many things they need to replace potential Chinese production to make not reliable with not rely on the Chinese supply, right? So there will be tons of investment. I see United States has to fund a lot of mining projects. If not in the U.S., but it has to be friendly country in Canada or somewhere else. So there will be a lot of support from United States government for the critical metal. For the precious metal, I see it's a different trend. You saw that, everybody saw that. It's a central bank continue to buy gold, right? So there's a huge deficit of United States. We probably going to have $1 trillion in interest this year. So people really worried. Even there is JP Morgan, JP Morgan, a lot of people don't like JP Morgan, but their chief strategist in their, to their private client, their most precious, they said, United States could heading to a Weimar Republic in a few years. That's what they said in their private talk. So those things can happen. So people are grabbing on gold. And then for silver, it's even better. It's unbelievable. I'm in my presentation, I'm going to show the chart that you see the silver deficit is so large, you have to go back 100 years to see that. You have to go back to 1950 to see this kind of deficit in silver supply and demand. Okay, what happened in that early 60s? United States run out of silver. Remember, United States used to have the coin was a silver coin. This coin used to have 90% silver, and so it's Canada. And then in the 60s, they run out of silver. So they will pass a new minting law. So get rid of silver in the coin. We don't have enough silver. So right now, the situation in silver is very similar than in 50s.
Is a silver thesis there? It's an industrial metal. It's making the switch to industrial metal as well as an energy transition metal. Is that the thesis that's holding the silver?
Exactly. So we just look back history. 1950s was also industrial metal for the Kodak film, it took off. So that's take out all the silver and we run into silver shortage. Now it's mostly driven by solar panel, but also by many other things. Right? Solar panel, basically, you look at my report, it took about 200 million ounces of silver out of people. It's unexpected just in the past 2 years, just take it off. Okay, and then it's continue to grow. This year growth will slow, but it will continue growth on a very high base. So we will see continued deficit after deficit for the foreseeable future. And it's really like a replay of almost 100 years ago. And I'm very excited about silver.
Lastly, Chen, is there any ideas that you think that work for investors right now? Any parts of the sector, any companies that might work?
Oh, I would recommend to take a look at producer. Silver producer, there are a lot of very, very cheap. As I said, this year comparison should be better than last year because energy price come down, material come down, labor maybe, could become flat. So the producer looks like attractive, and juniors really need to look into the management, the asset, the stock pickers market. I'm quite excited. That's why so many people came out here to the Metals Investment Forum, and we're quite excited about this.
Chen, it's always a pleasure to talk with you.
Likewise, thank you.
My name is Michael McRae here at the Metals Investor Forum for Kitco Mining.